Business overview. So we've got the audit log. So this is kind of an auditing type of report that's going to give us more, information or detail. So this is the users. I'll close up the hamburger, the month, and the all events. So this could be quite useful, of course, if you have multiple people that are working on a system. If you have multiple people on a system in QuickBooks, sometimes you want to limit the roles that each have, because that's going to be a part of internal controls. And you could then, do some auditing and check out who did what in the reports here. So if they messed something up, you can find it and say, you posted something to the prior period. So there's that one. We've got the balance sheet. So this is, of course, the standard balance sheet. We've got the balance sheet comparison report. Notice that this is one of the reports that we can construct ourselves basically off of a standard balance sheet. And you can see it's got this comparison, in essence, what we have done. We'll talk about how to construct these types of reports later. But just note that QuickBooks put these in here so that they're in like the defaults, but that makes it look like there's a lot more reports than there really are. The other option, like what QuickBooks could have done, is just take out all of the reports that you could construct from the basic reports, which would make it a little bit less overwhelming to have the number of reports here, but then you wouldn't have those nice basic reports that are used all the time, that are constructed from the major financials. So they kind of compromised and they put some of these comparative reports in here, but I would recommend that you learn how to make a comparative report so you can customize your own. So you've got the balance sheet detail report, which again is another variant, of course, on the balance sheet report, giving us more detail. So now that's giving us the actual breakout of the activity in each account. Most likely not the report that you're going to use all the time, because most of the time I think people will use the standard balance sheet and then get to that detail by drilling down to the transaction reports, which are like the general ledger. Balance sheet summary, I'll open that one up. Now this one is possibly, I wouldn't think of it as used internally as much, but it might be a great external report that you use. Why? Because now this is more simple. So when you give the reports to somebody else and you're trying not to overwhelm them, you start with something easy. This breaks out all of the accounts by category or account type, which we'll talk about later. And then once you've engaged them, and they ask questions, hopefully, then you might bring in the more detailed reports. And that's the way I would recommend presenting the reports, right? It looks nice and clean, clean, short summary. And then when they start asking questions, you're like, okay, now let's get into the nitty gritty and get into the standard balance sheet over here so we can break out all of the accounts and dig into it. All right, and then we've got the statement of cash flows. Now, the statement of cash flows is technically one of the major financial statement reports: balance sheet, income statement, statement of cash flows. You also might have an equity report. But the statement of cash flows, if you were to construct them, and we have a whole courses of accounting on constructing a statement of cash flows, it's a great exercise. If you can make a statement of cash flows using indirect method and a direct method, then that's a good test that you actually understand double entry accounting. But the process happens after you create the balance sheet and the income statement. Why? Because normally we make the balance sheet and the income statement using accrual accounting, which means that we have deviated from a cash-based system because it's more accurate than a cash-based system for performance purposes, because cash-based systems can be manipulated by just maneuvering when you pay for things and when you receive cash. But we would also like to have a cash flow system, because the cash is the lifeblood of the company. So we can kind of get the best of both worlds by then taking what we have created and constructing a cash flow statement, backing out, in essence, the accrual components. So we might talk more about that in future presentations, but that's going to be that one. We've got the business snapshot, which will give you some general information. We've got the profit and loss, which is, of course, the income statement. We've got the profit and loss by customer. So this is another report that you can basically create yourself. And you'll note that on this drop down, we have the totals. We've been changing it to years. You can also change it by customer. and that'll give you these columns that will break this information out by customer. So that could be a useful report. It's a little bit more unusual. You might use it in like a job cost system, for example. Profit and loss by month, similar kind of thing. We've been looking at it by year. You can create that yourself. Profit and loss by tag groups. Tags are special things that you can use to then recreate reports, basically income statement, performance, profit and loss, P&L reports, breaking out the columns, just like we saw with the years and by customer, but now by tag. For example, if you tagged all the sales rep items, that could be useful. Similarly to other tools like class tracking and location tracking, which we have whole other course and sections on. Profit and loss comparison, another comparative report that you can make yourself based on the profit and loss, which we'll talk about how to do later. Profit and loss detail. So this is going to give us some similar to the balance sheet detail, but I don't think you use that as much because most people just go to the profit and loss and drill down to the transaction detail. Profit and loss percent of income. This would be like a vertical analysis type of report, very common type of calculation, but also something that we can create from a standard profit and loss, and we'll talk about how to do that later. You get these percents on the right-hand side, and so then we've got the profit and loss year-to-date comparison, comparing to the prior period of the same time frame, which again you can construct yourself. Quarterly report, profit and loss summary. Again, you can basically create that from